On a Friday, and time is 4:15 p.m. In Singapore. My name is Dylan. Welcome to my daily trader analysis video. So today, let's kick off with the dollar against Japanese yen. So this is the 4 hourly chart, and let's take a look right here. We are seeing that the price has been consolidating, but it is finally beginning to fall before it reaches the key support and resistance level at 107.85. Alright, so let's zoom in into the 15-minute charts. Let's see what we have here. So right here we've seen price made the first lower high. This is the low, and that's the lower high, signaling for a probable reversal since it got resisted at a resistance level at 107.73, but there's no real support, and price may fall further to previous low all the way back right here, price of 105.55. So we will be looking for opportunity to go for the sell as we see the price retrace to the falling trend line that we have plotted right here, a very minor one. That's just a preference, but if not, we can also look at the resistance level right here at the price of 107.16 to go for the sell. So that's for the dollar against the Japanese yen. And next we have the Aussie against the USD. Let's take a look at the day one chart. So we have seen that the price has slid again after the Reserve Bank of Australia has released its monetary policy, and the price has reached the final exhaustion level measured by the Fibonacci expansion at the price of 0.7371. And based on previous wave of depreciation, we can expect the price may fall even further and break lower. So that let's zoom in into the smaller time frame 4 hourly charts. Alright, so price has not shown any signs of reversal. Right now, slightly a little bit, and in fact, interestingly, the 4 hourly candle has closed just right at the key support level. That could be a little bit different from what I just analyzed slightly earlier. But anyway, it does seem that the price can still go for further depreciation based on the previous wave of depreciation right here. So we will still be looking out for opportunity to go for the sell in the smaller time frame, expected the price will reach the next key support level right here at the price of 0.7254. If you look at day one charts, that will make it make sense to you. Alright, so this is the previous resistance support, so that's the next key support that we'll be looking for. Alright, so if you look at the 15-minute chart, there is some form of exhaustion, but definitely it does still seem that the price can still fall further. However, I would suggest to stay away from this currency pair for now. Alright, so let's move on to the New Zealand dollar against the US dollar. And alright, so in the 4 hourly charts, we have seen that the price has fallen further and reached this major support at the price of 0.6834, and is most likely to fall further to the bottom of the major rising trend that's based on the day one chart. And into the 15-minute chart, we have seen that the price has formed reversal candle with confirmation that gives signals to go for the buy opportunity, as we have seen that the price is being supported at a major support or rather key support level. So but it will be more of a trading a major retracement rather than a reversal. So either that, or we can look for sell opportunity again as price appreciate all the way back to 0.6875, and short it all the way to the bottom of the rising trend channel. That's based in the day one chart, and not forgetting that if you look at the day one chart again, there is a major rising trend channel as well. Alright, so for the price to come down to the bottom is still pretty achievable, and there's a possibility that price will just continues to fall all the way back to the bottom of the major rising trend channel. Alright, so that's for the New Zealand dollar against the US dollar, just some consideration. So next we have the euro against the US dollar. Let's go into the week one chart. It's some time. Interestingly, at the beginning of the week itself, the price is attempting to break above, but what happened right now is that the whole appreciation has been wiped off. The whole appreciation for this week has been wiped off, and it has turned from a bullish to bearish candle, sitting below, just right below the major resistance, the key major resistance at 1.1471. That's based on the week one chart. So that signals the price may have resumed its depreciation. All right, so into the 1 hourly charts. Right, so we are seeing waves and waves of depreciation. The first two waves has completed. We can see that the price is currently repeating the same pattern right here. A wave of depreciation followed by consolidation, sideways, came down, sideways, consolidation, came out a little bit, and right now it seems to be resuming its depreciation again. And if we plot the falling trend line right here, we can see that the price is being resisted at the falling trend line. Highly possible that the price will go for another wave of depreciation to the price of 1.1339. That's the next support level that we can find right here. So that's for the euro against the US dollar. You may just want to go for the sell right here, setting your stop loss. Just 20 over 25 pips above the falling trend line itself. So that's for euro against US dollar. Next we have the pound against the US dollar. Let's go into day one chart. Day one chart itself, what we have right here is the price is appreciating within a rising trend channel. Pulls back, it's coming down. Right now it is kind of exhausting a little bit at the support major key support level at 1.4435. Seems to be exhausting. So let's zoom in the smaller time frame into the 1 hourly chart. So what we have right here is that the current structure does suggest that the price may jump, but not so much, not to the extent of a reversal. If you look at the bigger picture, it is still definitely pointing down, but just the small structure right here suggesting that the price may appreciate a little bit at first, a spike maybe, and before it resumes depreciation all the way to the top of the previously symmetrical triangle, the top of the previously broken symmetrical triangle, or all the way to the bottom of the rising trend channel that's based on the day one chart itself. So that's for the pound against the US dollar. Oh yes, and preferably we will be looking for a sell at the price of 1.4522. So that's for the pound against US dollar. Last but not least, we have the euro against the pound. So let's take a look at the day one charts. We have seen that the price has most probably has resumed its major depreciation. We have a reversal signal right here, and followed by the confirmation yesterday, and definitely expected the price to fall further, even based on the structure that we have, and of course not forgetting that in the weekly chart itself, that is top of the major falling trend channel. So expecting a lot more of depreciation to come. And into the 1 hourly chart, we have just seen that the price has retraced to a support term resistance level right here. The previous support came, the resistance pulls back, now is resuming depreciation. Most likely it will depreciate all the way to the next key support at the price of 0.7834. But definitely we are expecting the price to fall much further based on the day one chart itself, all the way at least back to the major support at the price of 0.7704. So there's still a lot to be made from that, and try not to miss this big wave. So that's for the euro against the pound. Alright, so tonight we have the non-farm employment change at 8:30 p.m. Singapore time south. So what I felt is that there's definitely a lot of confusion right here, because firstly as in terms of this currency level as it is standing right now, is definitely not considered strong, but definitely not weak at the same time. So pretty much not at a level whereby they will really make any very huge decision or whatsoever. And the ADP has shown that the employment change is about 150, 160,000 if I still remember correctly. But the forecasts for NFP is 203,000. But whatever the case, as long as the price, as long as the figure is above 200,000, is a norm to the employment change, which is not a good enough figure for the Federal Reserve to decide whether to raise interest rate or not next month, where Recently, I heard some member from the Federal Reserve came out to say that there's a possibility of raising rate in June. For myself, I find it's quite unlikely, but that really depends on what happens after which. So for today itself, I will not speculate too much about it, but rather I'll just apply my usual new trading strategy, set and buy stop, sell stop. And of course, tonight we're going to be conducting the live trading session for all our alumni. So just come down and share together with us. And with that, I've come to the end of today's trading analysis video. So thank you for watching, and I'll see you again next week.